Have you ever looked at your insurance policy and felt like you're trying to read a secret code? You're not alone. But here's the thing. Underneath all that confusing legal talk, every single insurance contract, doesn't matter if it's for your car, your home, or your health, is actually built on a handful of universal rules. Today, we're going to crack that code. Okay, let's make this real. Picture this. You've just been in a minor car crash, a fender bender. You do everything you're supposed to. You call your agent, you file the claim, but then you wait. The big question is, will they actually pay up? Well, the answer isn't buried in page 47 of the fine print. It all comes down to 6 key principles. Your payout really depends on whether everyone has played by these fundamental rules. And to guide us through all this, we're leaning on the fantastic work of Dr. Suvindra S.G. He's done an amazing job of breaking down these really complex ideas. So our goal here is simple, to make this essential knowledge easy to understand so you can feel a lot more confident and empowered when you're dealing with your own insurance. So here's our game plan. First, we'll look at the basic insurance rulebook. Then, we'll dive into what we're calling your pact of honesty. From there, we'll talk about what it really means to be made whole again after a loss, what happens when other people get involved in a claim, and finally, and this is a big one, we'll cover how you can know and use your rights. All right, first up, let's just lay the groundwork. We're talking about the basic rulebook that everything else is built on. Now, let's get into the principles that are really about the foundation of the whole deal. These are the responsibilities you have before anything even goes wrong. Okay, the first and honestly the most important rule of all is the principle of utmost good faith. See, an insurance contract isn't like buying a used car. It's held to a much higher standard of honesty. It means you have a duty to tell the insurer everything that might affect their decision to cover you. And here's the kicker. Even if they don't ask you the exact right question. So, what kind of stuff do you actually have to tell them? Well, it's anything that's considered a material fact. And that's just a fancy way of saying it's information that could change the insurer's mind about giving you a policy or how much to charge for it. For life insurance, that's your age, if you smoke, your health history. For fire insurance on a building, it's what the building's made of or what it's used for. It's all about being an open book. So what if you get something wrong by accident? Well, it really boils down to your intention. If it's an honest mistake, that's called an innocent misrepresentation. The insurance company might be able to cancel the policy, but if you deliberately lie to trick them, that's fraud, and that makes the entire contract totally void, worthless. Honesty really is the foundation of the whole thing. All right, next up is insurable interest. This is a big one. It's basically the rule that stops you from, say, buying a fire insurance policy on your neighbor's house just in case. You can only insure something if you would personally suffer a direct financial loss if it were damaged or gone. You've got to have some real skin in the game. This example with Mr. Patel's house makes it super clear. Of course, Mr. Patel, the owner, has an interest. That's a no-brainer. But you know who else does? The bank that gave him the mortgage. If that house burns down, they stand to lose a lot of money. But his neighbor? Sure, the neighbor would feel bad, but they don't lose anything financially. No financial stake, no insurable interest. It's really that straightforward. Okay, so you've been totally honest. You have a real stake in the property. You've held up your end of the deal. So what happens when you actually have to file a claim? Let's talk about the principles that kick in the moment a loss occurs. This one is absolutely essential. It's the principle of indemnity. The whole purpose of insurance is to make you whole again. It's designed to bring you back to the exact same financial position you were in the second before the loss happened. It is not, and I repeat, not, a way for you to make a profit off of a bad situation. You get back what you lost, nothing more, nothing less. So how exactly does an insurer make you whole? They've got a few different ways to do it. They could just cut you a check for the cash value, they could pay to repair the damaged item, they could replace it with a new one, or in a catastrophic case like a house fire, they could actually rebuild the entire thing. The goal is always the same, to restore you financially. Now this one can get a little bit tricky. It's called Proximate Cause. Look, when something bad happens, it's often not just one single event, but a whole chain of them. The insurer's job is to trace that chain back and find the dominant cause, the one thing that really set all the other dominoes in motion. It's not always the last thing that happened, it's the main thing. The old story of Mr. Pinto is the perfect way to understand this. So he passes away from pneumonia, right? And maybe his accident policy doesn't cover sickness. But wait, why did he get pneumonia? Because he was lying on the cold, wet ground for hours. And why was he on the ground? Because he fell off his horse and broke his leg. The accidental fall, That was the proximate cause that started the whole tragic chain of events. So the claim gets paid. So far, we've really been talking about the relationship between you and your insurer. But things can get a lot more complex when other people or even other insurance policies get thrown into the mix. That's where our last two principles come into play. Let's start with a really simple way to think about a complicated sounding word, subrogation. Imagine someone else is at fault for your loss, like they run a red light and crash into your car. Your insurance company will pay you first to get your car fixed quickly. Then they step into your shoes and go after the at-fault driver's insurance to get that money back. So here's the more official definition. Subrogation is basically you transferring your right to sue someone over to your insurance company. Once they've paid your claim, they get to chase down the person who is actually responsible. And this is so important. It stops you from getting paid twice for the same loss, once from your insurer and then again from the person who caused it. It all goes back to that core idea of indemnity, making you whole, not rich. And that brings us to our final principle, contribution. This rule applies if, for whatever reason, you have the same property insured with two or more different companies. You can't just go and claim the full loss from each of them and make a profit. No way. Instead, the insurance companies will talk to each other and share the costs of the claim proportionally. Let's check this out with a real example. Meet Mr. Srinivas. His house is worth 12 lakhs, and he has it insured for its full value, but he split the policy between two different insurance companies. Now, a fire causes 3 lakhs in damage. He can't just collect 3 lakhs from insurer A and another 3 lakhs from insurer B. And here's exactly how it works. Because he split the coverage right down the middle, 50-50, they split the claim the exact same way. Each insurance company pays half of the 3 lakh loss. Together, they pay out the full amount, and Mr. Srinivas is made whole again. It's a perfect example of contribution in action. So, we've covered the 6 big principles, the invisible framework behind every insurance policy. And really, understanding these is your greatest strength as a policyholder. But what do you do if you feel like your insurance company isn't playing by these rules? Here's the most important takeaway of all. You are not powerless. Every single policy is legally required to have something called a grievance redressal procedure. Think of it as your official roadmap for challenging a decision you don't agree with. You can start with the insurer's own internal department, and if that doesn't work, you can escalate it to an independent ombudsman or even to the courts. Just knowing this path exists is a huge advantage. So there you have it. We've kind of pulled back the curtain, from that pact of total honesty to the ultimate goal of just making you whole again. These principles are what make the entire system work fairly. They're the real rules of the game. So the question for you is, now that you know them, will you look at your own insurance policy in a completely different light?